When you think about a plan for debt elimination and also planning towards retirement, Dave Ramsey's name can always come to mind when you know exactly what you need to do. However, very few people do follow it. Now, overall, when it comes to retirement, we are starting to see people around 50 that start planning for retirement, which at that age, you've already lost decades of compounding interest and investment strategies that you could have focused on. In today's video, we're going to be looking at 6 retirement stats that will make you change your mind in retirement, I hope, and make you think twice about what you need to do and what you need to plan in retirement. Starting with number 1, 54% do not know their retirement needs. That is right, guys. It is on average $1.25 million is the benchmark that people feel they need at retirement age to retire and be successful. Now, even using that general number, so let's say 1.25 million, where are you at in your retirement account? This doesn't mean your net assets, exactly what you're worth, including the house, everything else. They're talking 1.25 million in the bank to essentially supplement 20, 30, 40 years of retirement, depending on when you retire. Now, this includes your savings needs when you're at retirement age. If you want to keep your lifestyle, the cost of inflation and the lifestyle creep that we see, making sure you have multiple income sources, making sure your healthcare costs are covered. There's a lot of different tools out there, but overall, guys, you're probably underestimating, and I think a majority of us are underestimating exactly how much money you need when you get to retirement. Number 2, the average Social Security benefit is less than $22K a year. That is right, guys. In 2023, the average Social Security payout was $1,790 per month. That is right, guys. If you think you could live on $22,000 a year, let me know in the comments, and also consider subscribing to the channel. 22K is below essentially the poverty level at this point, but that is what they give you. Now, Social Security Administration also notes and mentions that Social Security is meant to cover 40% of your income. That is it, guys. When a lot of people go into retirement age, they go 100% reliant on Social Security. They have their regular paycheck that is replaced by Social Security at the amount of $22,000 a year. And again, a majority of people are making much more than that in their income. And in addition, when you start getting to Social Security, or when you start earning Social Security, you go in there, and a lot of people do this with a ton of debt, which means, again, you're going into Social Security, you're going into a fixed income, you're going into more of a limited income, and you still have a ton of debt out there, which is kind of crazy. So definitely, guys, that $1.25 million saved in a retirement account is going to save you in the long term. Number 3, 34% of Americans have zero saved. Nothing at all. This means no 401k, no HSA, no IRA, no Roth IRA. There is nothing set aside, which means, again, when you're starting to go into the years when you're retiring, most people do not have the ability to retire, or they have to delay it by months, even years, because, again, they don't have enough money when they get into retirement. 34% not having anything at all. Now, also with this, a lot of people, and I have to note this, guys, is the side hustle. So for a majority of us that have side hustles, I'm not talking passive income, but have legitimate side hustles like YouTube. When you get to the point of not doing the side hustle, or you're at a retirement age, your side hustle income goes to zero. That is right. There's been a really big movement and a big understanding that side hustles are meant to supplement your income. You can make them as a primary source of income. Again, a lot of people do with social media and a lot of other things. However, a portion of that income has to be saved, guys, has to be put in savings accounts, emergency funds, debt repayment, even looking at retirement savings, Roth IRAs, a lot of different ways to really save for those side hustles. That way, when the side hustle is in or completed, or you don't do it anymore, you still have money to show for that. Number 4, almost 40% of people do not invest in stocks. That is right, guys. Stocks are really, honestly, the probably number 1 tool when it comes to wealth generation. You could make a case for cryptocurrency, but super volatility there, and also the risk factor. But a majority of people do not invest in stocks, or they put a lot into banks, they put a lot into credit unions, they put a lot into CDs. However, when you look at the volatility of the market, and we've talked about this before, guys, the S&P 500, so literally, if you just put money into the S&P 500, the average return in the last 15 years was 13.8%, which was the average return for the S&P 500 over the last 15 years, which means I don't know anywhere that you're going to be making 13.8% when it comes to the S&P investing. And when it comes to stocks, I don't know any bonds. I don't know, any T-bills, treasury bonds, whatever it may be, guys. I don't know many things that are going to be paying that much, which is kind of crazy. Number 5, a majority, 69%. That is right, guys. 69% of Americans do not feel that their retirement is on track, which again is absolutely crazy. They do not feel that they are confidently have enough saving to be in retirement. Now, again, you have to really think about this, guys. This is a conscious effort where when you look at your 401k, especially if you're single income, dual income, putting away 15%. Guys, honestly, I started putting away 15% almost 10 years ago. So in the course of 10 years that I've been with my current employer, I have saved north of $200,000 in 10 years. And now I'm to the point, guys, where the compounding interest and the growth factor in there is just absolutely phenomenal. And I'm going to put money in there if I got another 6 years to retirement at 50, another 6 years, which means we could be 300,000 plus just in the 401k, not including brokerage accounts and HSAs and my wife's income in her 401k and other investments in money we have in, our credit union. There's a lot of different factors, but again, 69% of retirees or people that are talked to and have really been surveyed for retirement say they are not on track at all to hit those retirement goals. Number 6, approximately 40% of people do not have any advice or financial advisor when it comes to savings or when it comes to retirement. So not only on the first part, guys, we don't have people that are putting a lot of money into their 401ks, their IRAs, their HSAs. On average, it is about 5%, which is kind of crazy. Recommended 15% going into the 401k. If you're only putting 5%, if you're putting 33% of what you should be putting into that 401k, guys, that means your retirement is going to be what? 66, 67% underfunded when you get to retirement age because you didn't put the money in up front. In addition, you are going to be losing out on the 10% you're not putting in there in compounding interest over the next, again, 10, 20, 30 years. Now, again, like I was saying, over the last couple of years, guys, we've been putting a lot into our investment brokerage account, and we've also been putting a lot into the 401k. I have also been maxing out my HSA contributions, which again is another tax advantage account. So between all of those guys, I'm getting a tax benefit for the HSA. We're maxing out or putting our 15% into a Roth 401k, and I'm also putting money into a traditional brokerage account, which is kind of crazy, guys. So all said and done, we are saving a lot of money. That way we can retire. And having a plan is where I feel a lot of people really do kind of fall short. When you think of budgeting, when you think of financial planning, when you think of retirement planning, most people, again, do not look at this or do not make any effort to look at it until you're already in your 50s, 55, 60, when you start sitting down with an advisor, or it is time to get ready for retirement, not realizing or finally realizing that 1, you have a lot more debt than you need to have going into retirement, or 2, you don't have enough money for saving for retirement or in retirement accounts, which means they will give you a date or they will give you a deadline when the money is out. And guess what? At that point, you are completely broke in retirement, just relying on that 40% supplement that we've seen from Social Security. So kind of crazy to think, guys. So that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.